Hello, everyone, and welcome to the VRIC channel. My name is Jesse Day, and today we are blessed to be joined by the president of Miles Franklin Precious Metals, somebody I always love talking to, Mr. Andy Schectman. Good to see you.
Jesse, good to see you too, brother. Been too long. I'm glad our little chatting before we've jumped online here. Glad to hear you're doing well. You look good, and thanks for having me. Look forward to actually seeing you in person here real soon in Vancouver, shaking your hand. But hey, thanks for having me. Looking forward to it.
Absolutely, me too, and thank you very much for coming on. So, I wanted to start with a more broader question, and that is what are the major catalysts and tailwinds you're seeing for the precious metals here in 2023 as we kick off the year?
Well, Jesse, maybe I've coined a phrase over the years saying that price is the greatest tool of misdirection. And although gold has done very well over the last few months, up over almost $200 from where it was a couple of months ago, and silver done very well too. Um, in general, I don't think price gives us any indication of the level of demand. And I know we're going to talk about the BRICS because I've been talking about that for 3 years now when no one else was. And to me, that is the ultimate driver of it. But let's sidestep that for a moment and just look at the fact that if price was an indicator of demand and of value, where the mainstream would say, hey, Andy, if gold and silver were so valuable, why in the midst of 40-year high inflation, why in the midst of a war in the Ukraine and just geopolitical and political chaos globe over, why has gold and silver not accentuated itself the way that gold bugs would assume it would? And that's a fair point. I get it. But what I would come back with, and it's hard for people to understand this unless you're digging, we have seen the greatest drawdown of physical supply from the COMEX and the London Metals Exchange that we've ever seen. We have the silver stockpiles on the London Metals Exchange, the lowest they've ever been in record, ever, since they started keeping inventory records on the London Metals Exchange. We have seen silver draw down on the COMEX, where when I say drawdown, I mean deliveries that leave the ecosystem, which I'm going to mention the significance of that in a second. Same thing with the London Metals Exchange. These were platforms that didn't traditionally entertain big deliveries, although it was something that could be done. It really never happened. In the past 18 months, we've seen a 70+% drawdown in the registered category of silver available for delivery on the COMEX market. The registered category are the bars that are available for delivery. And in February of 2021, we saw somewhere in the neighborhood of 140 million ounces, and now it's 33 or 34 million. So we've seen 100+ million ounces being delivered off of COMEX in 18 months. We've seen in one day, a month and a half ago, 45% of all of the kilo gold bars that back the mini contracts on the COMEX delivered, almost 26 million ounces in one day. We saw not too long ago, 5% of all the 100-ounce good delivery bars on COMEX delivered in one day. Who's got the kind of money to make this type of delivery? And when we take things off of COMEX, so without getting too deep, there's two categories on the COMEX exchange. There's registered, which are bars for delivery, and eligible. Those eligible bars could be in an account like mine, or in a hedge fund, or in a family office. They're bars that are eligible, meaning they're inside the ecosystem, their weights and purity have been validated, and they're in my personal storage account, which is eligible, but it is not for delivery. Now, if I want to make it deliverable, I put it into the registered category. So in any case, when you see deliveries that are not going from registered to eligible, but from registered to God knows where, significant. Pull these bars off of the COMEX ecosystem and they leave the walls of COMEX, they now have lost a good deal of their liquidity in terms of an industrial purchaser like Elon Musk saying, I'll pay everyone $12 an ounce premium for your 1,000-ounce bars, but I want them right now. Now, if you've taken them outside the ecosystem, to get them back in, to get them reassayed and re-entered into the ecosystem is not only time impractical, but wholly cost impractical. And so when you see these deliveries, it's incredible. In fact, in the third quarter of 2022, we saw 400 tons of gold sent out off the COMEX market. 400 tons, and so what was interesting about that 400 metric tons is that there was an article picked up recently by Bloomberg and by Reuters that said of all of these tons that were shipped, only 120 of those tons were validated. We know who bought it. The 280 or two-thirds, 280 tons or two-thirds of all of that gold that was shipped out, we didn't know who it was. It was unverified. And that 400 tons in the third quarter is roughly double the next biggest quarterly deliveries off of COMEX in history. And we're already at over 700 tons delivered for the year. There's still a couple of weeks left at the end of the year. I know that this is coming out a little bit later, but the point of it is that by the time people see this, the year will be over, and we will have already been way above the biggest year ever in terms of metals being shipped out of the country. It's very significant. Now, just the other day, China came out and said, we have been accumulating a whole bunch of gold. Here are our updated numbers. So now we know that these mystery buyers are those nations eastward, like the BRICS countries. And the article that Bloomberg and Reuters put out before China said, yes, we bought 40, 50 tons last month, Bloomberg surmised that it was Brazil, excuse me, it would be Russia, China, India, and Saudi Arabia. Now, these are the BRICS countries because, as we do know, Saudi Arabia has already applied for BRICS instatement. And look, the bottom line is simply this. I guess what I'm getting at here is this. Price has been used as a tool of misdirection because the biggest money in the world is using that price to run cover for incredibly large deliveries that are literally draining from the top on down the biggest epicenters of supply, like the London Metals Exchange, like the COMEX. The biggest money in the world always front runs what is coming. They're always in position before the little guy figures it out, and they are using price as a tool through levered futures contracts to suppress the price, to allow them the ability, without being rated or without being called out, crowded out of the trade. They are emptying the shelves globally of all of the metal from the top on down and using price as a tool of misdirection. So what are the drivers? The drivers, to me, is that the biggest, most sophisticated, well-funded, well-informed money in the world, the people closest to the information, are draining the exchanges and using suppression of paper to run cover for it. If you see that, then nothing else matters. All of the noise, the rhetoric, and the suppression of the paper price is being betrayed by the massive acquisition. And more relevant than the massive acquisition is the pulling these huge industrial-sized gold and silver bars, which really only have tremendous liquidity within the ecosystem, pulling them out, meaning it's a one-way delivery. These bars are leaving COMEX, they're leaving the London Metals Exchange. These bars are extremely expensive. They are only going to be accumulated by the most sophisticated buyers, and they're leaving, and they're not coming back. So to me, that is the driver. It is the movement of metal out of the system by the sophisticated investors. The rest is all just noise to me.
Well, let's shift to the BRICS nations currency. because you've been talking about the end of the US dollar hegemony for a while, as well as this new BRICS nation currency, and supposedly it's going to be backed by commodities, or perhaps gold. I don't know if we're totally clear on that yet. But do you think this new currency will actually come to pass? And how do you see that timeline playing out? And do you think it will stand a good shot of competing with the US dollar as a world reserve currency?
The answer is yes to everything. In 2019, when the Bank of International Settlements reclassified gold as the world's only other tier one reserve asset, let that sink in for a minute. Reclassified gold as the world's only other tier one reserve asset next to US dollars and treasuries, the only other one, it became very obvious to me that the acquisition and repatriation of gold by the world's central banks was more significant than people were quite understanding. When we saw shortly after gold was reclassified, or shortly prior to gold being reclassified, rather, the repatriation of gold from the New York Fed and the Bank of England by the Bundesbank, by the Bank of Turkey, Hungary, Poland, the Czech National Bank, the Bank of Austria, the Dutch National Bank, they all massively repatriated their gold and then went on a buying spree. And this has continued more or less since 2017, 2018, where we've seen this huge accumulation of metal. Now, when you talk about it supposedly being pegged to gold, the Russian finance minister did come out not too long ago and said, we are going to issue a new reserve currency, we being the BRICS nations. And it will be a basket of local currencies, meaning Brazil, Russia, China, India, South Africa, and whatever other countries have subsequently joined on, and a pegging of commodities to, as you mentioned, it's not clear if it's just gold or other commodities, to the currency. Now, where I have taken it a step further is looking at the success of the digital yuan, which has been going on now for several years, and it has been backing the infrastructure and the settlement of contracts on the new Belt Road Initiative, which is a huge deal. You know, it's the most ambitious infrastructure project in human history. And the Belt Road Initiative is something that people should not sidestep, should not ignore. All 13 OPEC producing countries are on the Belt Road. I don't remember how many countries, 140, 150, 160 countries have signed up to the Belt Road, which is connecting Asia, Africa, parts of Europe, and South America. You're talking the most ambitious infrastructure project ever attempted. Look at all of these pieces that are being put together, the connection of 75 to 80% of human population, a pegging of commodities to a new currency, gold being reclassified tier one, the RICS and BRICS, Russia, China, India, South Africa, they're the largest producers of gold and accumulators of it in the world. But if it's not just gold, you have countries like Saudi Arabia could pledge oil. You have all of these countries that are joining the BRICS nations that are Gulf Coast or oil producing countries that are joining the BRICS nations, but way deeper than that. I mean, you could look at all of the countries that are pledging their desire to join BRICS, and they're all rich in commodities, whether it be rare earth metals, whether it be liquefied natural gas, whether it be oil, whether it be gold, whether it be silver, whether it be fertilizer, whatever it is. Using the distributed ledger technology of the successful beta test, call it a 3-year beta test of the digital yuan, which has already exceeded 25 billion in settlements. They even rolled it out at the Winter Olympics in Beijing, worked just perfectly. So you have a digital yuan that works, that you could use as the rails of a new BRICS currency that will show the immutability and the authenticity of what is being pledged to the new currency. What better way to roll out a central bank digital currency than to have it in a cooperation with all of these countries that are joining, using commodities to peg to a new system? And, you know, it is the rallying cry against the Western hegemony, against the Western perceived hypocrisy, that brings all of these countries to the table, including a whole slew of countries that you know people aren't even talking about. Algeria, Argentina, Iran, United Arab Emirates, Nicaragua, Turkey, Indonesia, Senegal, Nigeria, Afghanistan, Egypt, Kazakhstan, Saudi Arabia. It goes deeper into that, where you have now the countries in the BRICS Plus members where you have Argentina, Nicaragua, you have Egypt, Algeria, Iran, Saudi Arabia, United Arab Emirates, Nigeria, Senegal, Afghanistan, Kazakhstan. You have Thailand, India, Indonesia. All of these countries are joining. I mean, literally by the day, more and more and more are joining. All of them will peg a commodity to a distributed ledger technology, which is the glue that will make it work, giving everyone equal footing and say at the table. It is the rallying cry against the Western hypocrisy, hegemony, sanctions, you name it, freezing of assets, kicking out of SWIFT. That's what gets everyone to the table. What's going to make it work is pegging and pledging commodities to a new distributed ledger technology that the whole world can see. So yes, it's coming. And yes, it's going to work. And yes, it's going to challenge the dollar for world reserve status. It may not happen all at once. But as Zoltan Pozsar has said, he basically said we are entering a new era of backed by commodities, called it Bretton Woods 3, rather than a system dominated by debt instruments and paper. It's about what do you have that's real? And I think that is what this new system will be. And I do believe it will very quickly challenge the dollar for world reserve. And the key to it all is Saudi Arabia and OPEC. Now, we mentioned OPEC, all 13 countries are on the Belt Road. Saudi Arabia has just pledged that they are joining BRICS and has told the world that China is their most important oil trading partner this year and for the next 50. All it will take is for Saudi Arabia and OPEC to announce that, hey, thanks for the memories, West. We are now going to issue oil payment in the new BRICS currency, whatever that is, whenever it comes out. It's going to be any day now. And when that happens like that, everything changes in the West, as the dollar, which has been accumulated for 50 years because it is the sole settlement currency for OPEC, if that changes, the entire world dumps dollars in a matter of seconds. And inflation spikes to the moon, as do interest rates, which are inversely correlated to what makes people feel wealthy in this country: stocks, bonds, and real estate. There's your Klaus Schwab Great Reset. Hope it doesn't happen, but I will tell you that the pieces are rapidly moving into place that says, yeah, it's probably going to happen. So I'm fairly convinced it will.
Well, let's talk about central bank digital currencies, because according to an article on Decrypt, mainstream financial institutions in the US are working with the Federal Reserve to test a digital currency platform. I'm wondering how you compare that with the BRICS nations' currencies, because you mentioned the Chinese digital yuan, which is kind of a form of CBDC. So, are there any concerns there in terms of surveillance or having maybe a Chinese government influence over the BRICS nations' currencies? And how much of a threat do you think CBDCs in general will be? And do you think they will be successful in launching them in a place like America and a place like Canada?
Yeah, I do. I mean, first of all, you have something in terms of the BRICS and the Chinese central bank digital currency. You know, again, I think it will be not administered per se by China. Maybe it will, maybe it won't, but I think it will be the rails. The technology will be the rails for which the BRICS currency runs upon. I don't know what Chinese, if there would be anything that would be untoward or meddling or that, I guess that remains to be seen. That's a little outside my bailiwick, but I will tell you that they have been working on this for a very, very long time. In fact, just last month finished a trial. I think it was like a 40-day trial of a technology called the M-Bridge, which is the ability for countries to trade central bank digital currencies instantly, where settlement happens immediately. And it was a trial between China, the United Arab Emirates, and I want to say Singapore, the three countries, and they did millions of dollars in transactions that were successful. All of them, by the way, usurping or sidestepping the SWIFT system or the intermediary U.S. intermediary banks. So here you have a testing of central bank digital currencies that can go cross border, because I think there will be more than just a BRICS currency. There will be other central bank digital currencies. In fact, the Bank of International Settlements told all of their member banks that every country must have an operational CBDC by 2025. So yeah, this new test that's going on between, MasterCard and all the big commercial banks here in the US, along with the Fed doing a beta test, if you will. They're basically accounting of their books now and moving it over to a distributed ledger to do a test to make sure that it works. It's coming. There's no question about it. On one hand, the Federal Reserve wants it so that they can enact monetary policy directly to the public, where they don't have to have the commercial banks lending money into existence. And you can see this by the huge amount, over $2 trillion in the reverse repo market. What that basically is telling you is that the banks would rather give their money to the Fed earning 4% with no risk than lend it out to any of the people in the country for a home loan or a car loan or a home equity or mortgage, whatever it may be. There's more risk, is what that is telling you. The banks see more risk by lending it out to the public than giving it to the Fed. So that's not what the Fed wants to see. See, when the Fed creates these or buys the bonds, creates money to buy the bonds from the banks have two options. They can either lend it out to the public, which is how money is created through credit cards and loans and whatnot, or give it to the Fed in a reserve account earning 4% with no risk right now, 3-4%. So when you see over 2 trillion in there, the Fed, if they want to either increase velocity or decrease velocity, they can do it directly to the public through people's iPhone or through their smartphone. The way that it is right now, they are reliant upon the commercial banking system. So that's one reason that the Fed's going to like it. To your point, I think the IRS and the government would like it for another reason, and that is for scrutiny. And certainly there's no way to hide when you have no cash, when you are everything you do is on a distributed ledger, whether it be paying the babysitter or losing $50 on the golf course to your buddies or whatever it may be, going to collecting money at a garage sale or whatnot. There is no way to hide. And when you see now a $600 1099 trigger using things like Venmo and Zelle and whatnot, the walls are closing in, no question about it. It's kind of a dual deal here, where on one hand, yes, we will lose all privacy. On the other hand, the Fed would like to be able to enact monetary policy. It's coming. Whether or not it's backed by gold in this country remains to be seen. Would not surprise me one bit at all in terms of a reactionary policy by the Fed. They would have to back it by gold or pledge it to something, back it by something, if indeed the BRICS nations do issue a commoditized currency, because who in their right mind would want to invest in treasuries of this country or anything in this country when interest rates are well above or well below rather the rate of inflation, and we are an insolvent country. When you factor in Medicare, Medicaid, Social Security, government, military pensions on top of a $30 trillion debt, we're at $150 trillion. And a trillion seconds ago was 31,688 years ago. This country is insolvent. This country is broke. And if you issue a new currency by a group of countries that are trying to be transparent with this distributed ledger technology, showing the world what is pegged, who pegged it, who pledged it, it's a whole new system that we are walking into, where it will not be dominated by the West if that happens. And the only way they're going to be able to make it work would be to follow suit and with great transparency, roll out a central bank digital currency. What better way to do it than to say, well, this is what we're going to do. We're going to pledge it to gold. And then that gets into a whole thing that we probably don't have time to talk about, which is the governor of the Dutch National Bank, who just came out and said, all of us have something called the gold revaluation account on our balance sheet. Most of the gold held in Europe and the US is valued at $35 an ounce. In the US, I think it's 42.22. But that goes back to Bretton Woods. So you got all these countries like the Netherlands who have all of this gold on their balance sheet, which is not allowed to be offset against liabilities. It has to stay there on its own, but valued at $35 an ounce. And it's in something called a gold revaluation account. Well, what if they were to put it up to 5,000 an ounce and peg it right there to a new system. At 5,000 an ounce, it makes their balance sheet solvent. At 35 an ounce, and you can't even use it on the balance sheet, it doesn't. But you put it at 5,000 and allow it to be pledged against liabilities, all of a sudden, all of these countries, the US included, go from completely insolvent to solvent. So is that part of the plan? Is that why gold was reclassified tier one? Is that why we're seeing a massive exodus out of COMEX and the London Metals Exchange, where central banks are accumulating it and repositioning it? Is that why we're seeing this? And I would argue it is. And in particular, if you look at the countries that are joining the BRICS nations, their amount of gold purchases and in many cases their allocation in terms of the percentage of their gold holdings as a percentage of reserves is startling. Let me just read you a couple of them. Venezuela, their gold holdings represent 82% of their reserves. Uzbekistan, 65%, Kazakhstan, 63%, Bolivia, 55%, Lebanon, 49%, Belarus, 40%, Turkey, who bought more gold than any country in the world the first 7 months of 2022, 29%, Kazakhstan, 22%, and the list goes on and on. These are all the countries that have either pledged or said they are going to join BRICS nations. They're massively accumulating and increasing their gold holdings, which represent a substantial part of their reserves. Is that because they were told, if you want a seat at the table, you need to have gold because it will be pledged to a new system? I would argue, hell yes. Why are all of these countries like Germany and the Netherlands and Austria and Poland and Hungary, why are they all accumulating gold and repatriating it? Why? Why are they holding it instead of leaving it at the Fed and the Bank of England, where they have greater liquidity? These movements, why was gold reclassified tier one? Why did the central banks do all of their repatriation before it was announced? These things put together make it very obvious to me that gold will be part of a new system. It will be pegged to a new system. It will be revalued. When it happens, how it all plays out, I think is debatable. But when you see the biggest money in the world draining the supply from top on down, when the price isn't doing anything, yet you see massive short positions on COMEX, which enable the price to be suppressed, put it all together and you are seeing the biggest money in the world is using price suppression to front run a new system that is coming. And you can see it by the central bank's accumulation and repatriation. They're telling you, we don't just do this for the hell of it. We are clued into what's coming, and this is why gold is becoming so important to what we're doing. Now, they're not saying that, but their actions are betraying their rhetoric, and their actions are saying exactly that. Gold is where you need to be.
Very fascinating. It'll be so interesting to see how this all plays out. The VRIC is coming up January 29th and 30th. Tickets are free, guys. Link is in the description below. I wanted to ask what you're planning to present at this year's VRIC.
Well, I want to present this linear progression of events that I've been talking about since 2017. And it started with the goal, all of the central banks of Europe, starting with the German Bundesbank repatriating their gold. It progressed to gold being reclassified tier one. Then we get to the Belt Road Initiative. And then we get to Saudi Arabia signing a joint military cooperation agreement with Russia, and Russia doing the same thing with Nigeria. And it's progressing to a point where it is becoming almost irrefutable that this is exactly what is happening. So I have, with Jay, done a couple of interviews that I have showed this progression of events. And it ended, our last interview was this summer, August or September. I want to pick up where I left off, because what's interesting is that from 2017 to when I did that interview with Jay in early 2022, there were a whole bunch of things. And I kind of equate it to a roll of toilet paper spinning like this. And as you get closer to the end of the roll, where we are right now, the roll starts to spin faster and you start to notice it much more acutely. That's where we are right now. I think we're getting to the end of the roll and something is going to happen. And I want to bring up to speed not only everything that has happened for the benefit of people who haven't been listening to me for the past 3 years, where we are going. And I'll get you to a point where you have to actually make the connection, but I'll put all these pieces together for you and show, in and of themselves, these pieces are not as relevant as they are put together. And put together, it's like, oh my God, this has to be what's going on. And that's what I intend to do. Show the attendees that we are entering the final stages of a Keynesian experiment gone bad. And I think the rest of the world has had it. And they are joining together to fight the Western hegemony, to fight the Western hypocrisy, to fight the Western sanctions, suppression, all of the things that the West has done that angers the rest of the world. That's what's getting everyone to the table. The commodities, the pledging, the gold being reclassified tier one, all of the gold being accumulated by these countries tells me that something's coming. And if you are on the wrong side of it, if you are fully invested in dollars, you're destined to go broke. And if you are not a contrarian, you are destined to be a victim. And now is the time to realize that. That's what I'm going to attempt to do. And I believe it in my soul that this is where we're heading. So, right, wrong, or indifferent, I'm going to try to shine a light on where I think we're heading, and hopefully help a few people open their eyes to what the rest of the world is doing outside of the West, here with a little bit of facts and a little bit of hyperbole, but hopefully people will see that this looks like it's really happening.
Well, looking forward to that. And before I let you go, if anyone wants to hear more from you, where should they go online? And maybe tell us a little bit about Miles Franklin Precious Metals.
So we've been in business for 33 years. We've done almost 8 billion in sales. We've never had a customer complaint ever. Won't find one on Google. We're one of only 27 U.S. Mint authorized resellers in the world, an honor that we're very, very proud of. A plus with the Better Business Bureau, worldwide exclusives with BRICS. The reputation, I think, speaks for itself. But we left our corporation in the state of Minnesota, even though I moved to Florida a year and a half ago, where we've had a satellite office for a decade. State of Minnesota is the only state in the country that mandates licensing and bonding in what is a federally non-regulated industry. So what sets us apart, on top of our reputation and our U.S. Mint accreditation, is the licensing and bonding that we maintain in the state of Minnesota in a federally non-regulated industry. Our biggest shortcoming has been our website. I have really never gone online. We've achieved all of this success without an online presence. We have a website for information. I have been bullied into acquiescing to build a new website, and it will be rolled out before the Vancouver conference. It will be rolled out. I am assuming, I've been telling people since August. I mean, the bane of my life right now are website developers. And it has been the most frustrating experience in my 33-year career. But I am being promised that I could turn it on today. And we are right now doing a soft launch within our corporation to find bugs and fix it. You will be able to purchase online eventually by the beginning of the year, and that is milesfranklin.com. You can check it out now. If people are interested, if they send an email to info@milesfranklin and mention the Vancouver Resource Conference in the subject line, or this interview with Jesse, I will be more than happy to send them not only an up-to-the-moment inventory sheet with prices that will be as good or better than anyone in North America, but I will also make sure, as my appreciation from being asked to be a presenter at this conference, that your listeners will get the best price in North America. They'll get our personal attention. We will answer questions and call you back if you ask to be called. Put a phone number, say, please have someone call me. Here are my questions, or just send me an inventory. We can do all of that, and we'll make it a really, really, really good experience. And so just send an email to info@milesfranklin, mention the Vancouver Resource Investment Conference, ask any questions, ask for an inventory, and ask to be followed up with if you wish, and we'll make it worth your while. But this has been great, Jesse. I'd love to do this more often. If you ever have room to chat and get it out there to the public, I'd love to be part of it. So feel free to hit me up anytime. And in the meantime, I'll look forward to catching up with you in person next month.
Yeah, absolutely. I'm also looking forward to seeing you in person at the Vancouver Resource Investment Conference, January 29th and 30th. And thank you so much for joining us today.
Yeah, my pleasure. You stay well.
We actually need to have a damn good recession.
The Russian economy is a gas station run by the mafia.
$41 trillion has been created out of nothing.
There's a stranglehold in China on most of these resources.
The outlook and fundamentals for the metals remains very, very strong.